Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah. You're watching IndianOpen. Let's go straight to the headlines. Canada and Mexico might be exempted by the Trump administration from import duty on steel and aluminum, says US Secretary Steven Mnuchin. Government comes to the telecom sector's rescue. Cabinet allows more time for the telcos to pay for spectrum bought in auctions, also relaxes spectrum holding caps. Competition Commission of India penalizes Jet Airways, Indigo and SpiceJet for anti-competitive behavior, finds the three airlines guilty of cartelization. Liquor may get more expensive across the country as the GST committee gets set to consider an 18% tax on alcohol used to make beverages, that is ENA. And the Telugu Desam party quits the National Democratic Alliance despite the centre's assurance that Andhra Pradesh will get the same amount of financial aid as any state conferred with special status. To all the women and to everybody across, wishing you all a very, very happy Women's Day. More power to all of you. I'm missing my two women co-anchors for sure today. Benka and Ira both have some issues because of which they are not able to come in today. But the show must go on, and that's what we do today. Let's take a look at the trade setup for the day. It looks to be a market which is getting plagued by sell on every rise. And while that template was existing on a period of 4 or 5 days, now what we're getting to see is that the markets are coming off on an intraday high as well. Markets start off higher, then tend to drift lower. Look at yesterday's chart, and that's a prime example of what happened. We ended down about 1%, but more importantly, we started off reasonably okay and then drifted lower during the course of the day, and that is not good news. And you can argue about what's leading to this, what is not, whether banks are playing the biggest part or whether other sectors are coming to the fore as well. But the headline numbers suggest that there is a downtick at almost every single point of time, that we're starting off on a high note. So we're going to start off on a decent note in today's session, aided by what's happening to the global markets. That is not to say that that will continue during the course of the trading day. And frankly, action in almost every group which is a trader-friendly group suggests that traders are very, very wary of what the near term could throw up. Look at what's happening to the Adani Group stocks. Look at what's happening to the Anil Dhirubhai Ambani Group stocks. Yesterday, the JP Group stocks participated. And it's not just Adani Enterprises or Adani Transmission. The Nifty 50 name, Adani Port, fell about 7.5–8% yesterday. And that just shows the quantum of fear or bearishness that exists in certain pockets. Very wary are trade participants. Base metals have resumed the decline on the LME as well. Aluminum and lead have closed down more than 2% apiece, and that probably indicates that the weakness that we're seeing in almost all of the base metal or the commodity stocks might well continue. Remember, the last few days, while we've spoken about the banks and some of these other group stocks, it's not that the metals have been shy of falling down. I mean, Hindalco, Vedanta, etc., all of them have come off in a hurry the last few days, in the red for most part of the trading days, to be honest. And yesterday, I think fairly interesting action was seen in ICICI Bank, SBI and the likes. ICICI Bank clarified that they don't have any exposure, but the volumes higher, the delivery value much higher on ICICI Bank, State Bank of India and the others, which just suggests that there is some delivery-based selling that happened yesterday. Remember, day before yesterday wasn't the case. There was hardly any kind of selling that came in despite the news surrounding. But yesterday, a lot of people gave way to these stocks and they resumed the fall and closed in at the lowest point of the day. So banks remain the focal point. I doubt that the flash pullback in bond yields will really continue. Yes, the center has made the pitch, and yesterday we saw that on an intraday basis, the 10-year bond yield came off about 7 or 8 basis points. But maybe that was a flash move. Doubt that that will continue in today's session. Anyways, the stocks to watch in today's trade before we get to first word. Telecom stocks, the deferred spectrum payment period has been extended to 16 years from 10 years. It should come as a breather for both Airtel as well as Idea. So watch out for these stocks. Maybe there is some positives, but for Idea specifically, the removal of the 50% band-wise cap aids this Vodafone Idea combined entity. Remember, the combined entity had access spectrum in 2 bands in the 5 circles. This is a little bit of a breather or a further boost to Idea Cellular. I dare say both the stocks should be active today. Idea even more so. Parthi's fallen quite a lot the last few days, almost 10% in the last 5 sessions. Let's see if there is some bit of a pullback that we'll see in these names. UB could be interesting. I think it's an Economic Times report. Heineken eyes driver's seat in United Breweries by buying the EDC's Malia shares to the tune of about 14%. It's what ET says the stake could go up to. This should be interesting for United Breweries. The space is under a bit of turmoil, and we'll tell you why a bit later on, but this should be interesting for United Breweries individually. And lastly, I picked up one brokerage name. There are 3 or 4, but I picked up one, and that is Aegis Logistics. Motilal Oswal, no, not United Breweries. Aegis Logistics is the stock. Motilal Oswal has initiated a buy with the target price of 303, which is an upside potential of 30%. The bull case target price for Motilal Oswal is 342. So that's a substantial upside that Motilal predicts in Aegis Logistics, almost to the tune of 50% in a bull case scenario. Let's see if this one has the legs to move up for today's session. The market is likely to start off positively. Maybe, just maybe, we might have a positive move in Aegis Logistics as well. Anyways, I spoke a lot about telecom and liquor companies, and those are amongst the themes that we'll discuss today on First Word. It's a collection of the top editorial stories that we are aiming to present today on IndianOpen. Why Idea Cellular and Vodafone may stand to gain the most from the government's latest relief package for telecom operators, we tell you that. Excuse me. Liquor makers in India may soon have to pay more for the most crucial ingredient, alcohol. We take a look at some of the public sector banks as well outside the Nifty Bank Index that have not performed the best of late, and what do the valuations now suggest. Last but not the least, talk about what's happening to the markets a bit later on in the show as well. However, the first piece of agenda for the day, and that is what Cabinet has done, which has approved a relief package for the beleaguered telecom industry. Operators now have more time to pay back their spectrum liabilities and can hold more spectrum as well. Confused? Well, let's get in Darshan to tell you and simplify this and what it means for the existing telcos. Darshan, good morning.
Yeah, good morning. So basically, yesterday the cabinet meet was there in which they simplified some rules which will benefit the telecom operators, at least the incumbent, not Jio so much. So firstly, there were 2 things that they did. The first thing that they did was that they extended the spectrum payment period from the earlier 10 years to 16 years, so they get an additional 6 years to pay back the government for the spectrum. And secondly is relaxed spectrum holding cap, which I will talk about later. The first move that they did, let's take a look at what the current scenario is. So when you buy spectrum, 50% has to be paid upfront, then there is a 2-year moratorium, and then the balance 50% is to be paid back over the next 10 years. Now what has happened is this 10 years has been moved to 16 years. That means, for paying the balance 50%, they will have an additional 6 years. Now, nothing in terms, so that will actually help them increase their cash flow and manage the capex. Basically, their balance sheet will be repaired significantly because they have 6 more years to actually pay back this spectrum. So that's the first thing, and that will benefit all the telecom companies. Now, the second thing that they did is the relaxing of spectrum caps. So the overall cap, currently the cap is at 25%. They made it 35%, but currently no one has that close to 25%. The second one was initially they had a band-wise cap. So each band had a 50%. Now what they've done is combined all the bands, and they say that on a combined cap will be 50%. Now this benefits companies like Idea Cellular and Vodafone, which have excess spectrum because of the merger that will come in. Now if you're looking at the combined spectrum, excess spectrum, so in Maharashtra as well as Gujarat, Kerala, Haryana, UP. So this is the Idea Vodafone combined spectrum. So initially what happened is if you had excess spectrum, either you had to return it to the government or find a buyer, and it will be difficult to find a buyer because anyway there was excess spectrum. So overall expect Jio won't benefit significantly from this, but expect Bharti Airtel and Idea to react positively to the news that has come out yesterday.
And it's twin good news for the Vodafone Idea combined, right? Both the pieces of news impacts Vodafone Idea in a positive way.
The first piece helps both Airtel and Idea, and Idea Vodafone, I'm talking about the combined entity. And secondly, will definitely help them once the merger happens, because then they will not have to actually sell the spectrum or give it back to the government. They can keep it with them. So that's the positive.
Should be interesting. They've been beaten down so badly, Darshan. Should be interesting to see what happens to these stocks today. Remember, if we just pull up the 1 week chart for both Bharti as well as Idea, and Bharti in particular, I remember because we've been talking about it every day or almost every day when we do the heat map as to the quantum of fall that we've seen in Bharti Airtel. Look at this, last 7 days about 4.5%, and in fact if you take from the peak, I think it's about a 6% or a 7% drop that we've seen in Bharti Airtel over the last 7 days, over the 10 days even more so. So it's not been a great period if you're a Bharti shareholder. Maybe, just maybe, a bit of a relief rally. Don't know if it will last or no, but likely that will be a bit of a relief rally that we see in Bharti Airtel in the session today. Maybe, I mean, Idea Cellular probably even more so. Okay, it may be advantage telecom, but disadvantage liquor companies. The GST Council may consider an 18% tax on alcohol used to make beverages. Now, this is the story is there on our website as well, or will be there on our website www.bloombergquint.com. But here's the synopsis. The GST was coming back, and I'm choosing United Spirits as an example out here. The GST Council is likely to consider levying an 18% tax on extra neutral alcohol. We typically call it ENA, which is the alcohol used in making alcoholic beverages. So the current duty is about 7 to 8% current levy. The plan, as we learn, is to take it up to 18%. The GST Council's next meeting is scheduled on March 10th, which is 2 days from now, which is on a Saturday. So the meeting is scheduled on a Saturday, and we'll have to watch out for what happens to these, to the outcome of this meeting. But we learn, Bloomberg Quint learns that there is likely to be a levy of 18% on ENA. The proposal, remember, was deferred last year to seek the opinion of the Attorney General of India. We do not know what the Attorney General's opinion is, to be honest, and it will carry some weight as to what does the GST Council and the decision of the GST Council. But this is what we've learned at this point of time. Now, I chose to pick out some points from the Morgan Stanley note. The broad numbers are that the revenues for the state will go up by about 1,100, 1,200 crores, obviously paid by all the liquor companies. I chose to nail it down to 1 or 2 companies, and usually we speak about United Spirits, so I'm choosing that. Morgan Stanley came out with a note day before yesterday, and they say this, that obviously that the imposition of this 18% GST on ENA versus a current levy of 7 to 8% is earnings negative. Their calculation suggests that there is a 15% impact on earnings if United Spirits is unable to mitigate the impact of the higher input costs. 15%. I mean, the base scenario is that the FY19 EBITDA margins will compress by nearly 200 basis points, and that leads to this fall that we'll see in the earnings for USL. I just thought that one point that needs to be made out here is the kind of fall that we've seen in select alcohol names already. Now, I've again chosen United Spirits as a case in point, as an example, but the chart will come up on your screen to show you the quantum of fall. That mark that we've done is the mark from where United Spirits started falling post its numbers. It was that the high on the day of the numbers was about 3,930 or 3,950, somewhere around those levels. Yesterday's lows were about 2,950, give or take a few points here and there. So there has been 1,000 rupees correction in the stock price of United Spirits, nearly 1,000 rupees correction in the stock price of United Spirits already, because the numbers weren't the best, and the commentary on the con call was actually fairly optimistic. In fact, I remember speaking to Yatin when he was on the con call, and he said that he had not heard United Spirits sound so positive in a really long time in terms of the commentary. So the managements are bullish about how the demand scenario is. Management after management in this space that we've spoken to, whether in the breweries business or the pure spirits business, have said that they are very optimistic about what the growth is going to be. Despite all of this, stocks like USL, and for the right reasons, of course, have fallen quite a bit already. So keep in mind that if this does turn out to be true, yes, it's a negative, but there's a bit of a fall that we've seen already. So the extent of the fall may not necessarily be to the tune of 20-25%. That's the caveat out here. We'll, of course, get an analyst during the course of today and tomorrow to try and figure out what happens if indeed this turns out to be true, and what's the kind of impact on the stock prices of some of these companies as well. But just keep in mind, Saturday becomes a very, very critical day for almost all of the companies in the space, but the larger players as well, most importantly United Spirits, would be the focal points. So this is something that you watch out for. And during the course of the day, you'll also see this story on our website, as I said, www.bloombergquint.com. Okay, let's get in more updates. And banks, you can't do away with banks, really. They have a huge role to play in the current market fall. Large cap, mid cap, small cap, private, public. But while the constituents of the Nifty bank may have been blamed for dragging the benchmarks lower, smaller public sector banks have taken a big hit. In fact, some of them are trading at levels last seen in early 2000s. Yatin Mota standing by with a closer look at these PSU banking stocks and their valuations as they stand right now on the declared numbers. But Yatin, and while people may debate that we don't know what the adjusted book value could be, but from the reported adjusted book values, it doesn't paint a very pretty picture.
Clearly, Neeraj, and as you're mentioning, almost decade and a half low. Clearly, the smaller PSU banks are worst hit. In fact, this is one pack which probably the market ignores, and the kind of sell-off that we have seen in all these banks is unprecedented. In fact, the kind of levels we saw at the time when the government infused funds into them at higher levels, the share price even fell 30–40% from there. So if you look at a Dena Bank, Union Bank, Corporation Bank, Allahabad Bank, all of these stocks are trading at almost 20% of their total book value. So 0.2 times is what they're trading at the overall book value front. Andhra Bank, Punjab and Sindh Bank, Vijaya Bank slightly better, almost 0.65 times price to book. But the kind of valuation that all these banks are trading clearly indicates the kind of pain that we could see as far as their asset quality is concerned. And look at this, Dena Bank and Corporation Bank, lowest since 2003. If you look at Union Bank, that is at a 10-12 year low. Allahabad Bank, of course, it has been recovering, but the kind of lows that all of these banks are making is simply amazing. If you look at Andhra Bank, Punjab and Sindh Bank, Vijaya Bank, all of these stocks are just crumbling in trade. Of course, if you look at Andhra Bank, Dena Bank, all of these banks are at lowest level since 2003. So you can imagine the kind of pain investors would have gone through, given the fact that the allocation was quite wrong. And look at the asset quality also. Dena Bank, Union Bank, Corporation Bank, all of these, the gross NPA ratio is close to 15–16%. So if you look at it from Dena Bank perspective, 20% is the kind of gross NPA which was last reported. Union Bank, Corporation Bank, Allahabad Bank, no different. Their net NPA ratios are also worsening off. In fact, if you look at Vijaya Bank, probably cleaner among the lot, with gross NPAs only coming in at 6.17%, relatively better. But look at it, double-digit gross NPA, double-digit net NPAs for most of them, probably the reason why they are trading at a multi-decade low. In fact, if you look at the last capital infusion also, you could imagine, and the last round for Dena Bank and Union Bank happened for close to 4,500 crores. Allahabad Bank, the government infused 1,500 crores. And from those levels also, we have seen a stiff fall coming in all of them. Punjab and Sindh Bank also, if you look at it, the price at which the capital infusion happened for most of these banks, the prices are down almost 30–40% from those infusion levels. So clearly it has been not a great performance from the shareholders' perspective as far as the smaller PSU banks are concerned, trading at a multi-decade low.
The question is, Yatin, people are not ready to buy these valuations, right? One, the fear around the markets any which way is existing. And two, I think conversations, I don't know if you've had these conversations and whether the outcome has been the same, but conversations that I've had with people seem to suggest that they're still wary of what the book will throw up and whether the book will, whether there'll be more skeletons that tumble out of the closet, as happened in the case of PNP, for example.
Yeah, absolutely, Neeraj. And more importantly, for all of these smaller banks, the kind of exposure that they have to the power sector, to various assets, including Videocon, when there were various speculation happening. Of course, the management came out and clarified later. But for all of these smaller banks, a larger exposure to the power sector, to the telecom sector, to various other industries wherein there is stress, especially in the steel sector, they have gone bad. And the kind of write-offs that we have seen for smaller banks is unprecedented. In fact, you have larger banks like SBI, PNB also suffer because of fraud, because of various sectoral problems. But imagine the kind of size that these banks have and the kind of gross NPAs that they have seen, the kind of slippages that they have seen in the sectors. Probably nobody knows exactly what is the true picture as far as the book value is concerned, because you don't know what kind of a write-off and what kind of a skeletons can the book throw up. So clearly, the market giving it a valuation of less than 0.2 times, 0.3 times indicates the fact that they have been wary of the asset quality of such banks.
Interesting. Thanks a lot for that, Yatin. So, well, that's a snapshot, of course, of what the PSU banks are trading at. The probable price to adjusted book values, no one quite really knows whether the book can suffer further or no from where it is right now. Okay, as the last piece on First Word today, the Competition Commission of India has pulled up 3 airlines for cartelization in the cargo business. Jet Airways, Indigo and SpiceJet have been fined for fixing and revising fuel surcharges. Shivani Saxena explains the rationale behind CCI's action.
The Competition Commission of India has imposed penalties on 3 airline companies for anti-competitive behavior. The CCI today imposed fines of 39 crore rupees on Jet Airways, 9 crore rupee on Interglobe, which runs Indigo, and 5 crore rupee on SpiceJet. This fine is around 3% of the company's average turnover from air cargo transport services for the last 3 financial years. The competition watchdog found that these airlines were guilty of entering into anti-competitive agreement regarding fixing and revising of fuel surcharge. Now, fuel surcharge is a component of the freight charges. CCI condemned these airlines for using fuel surcharge as a pricing tool since it was essentially introduced to mitigate the fuel price volatility. CCI has condemned and initiated this action on receiving a complaint from Express Industry Council of India against Jet Airways, Interglobe Aviation, SpiceJet, Air India and Go Air.
I doubt that this could really move the needle too much on the stock prices of some of these airlines or no, but it's an important move nevertheless. Okay, one of the reasons why global equities are heading higher is the softer tone struck by the Trump administration right now. The US, in fact, is looking at providing some exemptions to Mexico and Canada when it imposes trade tariff on steel and aluminum imports, says US Treasury Secretary Steven Mnuchin, who was speaking to Bloomberg's Kevin Carroll. Here's a very small slice of that conversation.
The President has already made clear that it relates to Mexico and Canada, that to the extent we have a new NAFTA agreement with them, that they will be exempted from the steel and aluminum tariffs. So I'm not going to comment on other countries. It would be premature. But obviously, Canada, we have a very close relationship in terms of steel going back and forth, and that's something that we're focused on.
With regards to timing of this announcement, is it logical to think that we could get an announcement this week?
That is the plan, yes.
So as early as tomorrow?
It could be as early as tomorrow. It could be Friday. We're working to get the finishing documents on this.
When you look at the response from folks around the world, and let's start there, from China as well as the European Union, who have criticized this, who have said that they would file complaints. Some have already filed complaints. What's your response to those criticisms from those particular countries?
So first I would say, let's just put this in perspective. So the President has been very clear. This has been since the campaign. This has been since his presidency on what his economic agenda is. And we've talked about constantly it is a 3-tiered. It's tax reform, regulatory relief, and trade. So we got tax reform done. I think a lot of people question whether we got that done. It took 30 years since the last time. We've already seen the economic benefits of tax reform. We've done a lot of work in terms of regulatory relief. We're looking forward to hopefully the new Dodd-Frank bill passing on a bipartisan basis. I think that's a big step in the right direction for community banks, regional banks being able to grow. And we've been talking about trade for the last year. So since my first G20 finance ministers meeting, we've been talking about trade. So everything we're doing here has been in discussion.
But what about then when House Speaker Paul Ryan says, like he did the other day, that he's advocating for a more quote-unquote surgical approach with regards to these trade policies? Is he going to be satisfied this week when this announcement is complete? Is this going to be a more surgical approach like the Republicans on Capitol Hill have advocated for?
Well, again, I think it's somewhere in between. So, and I think, look, the President wants to take on the trade issue. It's a very important economic issue. As you know, China's market is not open to our companies and our workers the way our markets are open for them. The president believes in free and fair trade, but he wants reciprocal trade and reciprocal fair deals. And that's why when we go forward with the 232, there is a mechanism that, that will be able to deal with these issues.
Bottom line, this week, when there's a new trade tariff policy announced, what is the reaction going to be from the markets, number one, but Republicans? Is there going to be satisfaction, or is it going to be a lot of criticism, like, quite frankly, we've seen all week?
Well, I'm not going to comment on where the markets are in the short term. As you know, there's a lot of volatility. There's no question the market is still up a ton since the election, which is reflective of the president's economic agenda. And I think America is a great place to invest. So over the long term, I still think there's tremendous upside in the market.
Well, that's the U.S. Treasury Secretary saying that this week we will hear something on the tariffs on steel and aluminum. Maybe, just maybe, Canada and Mexico might be exempted. But that's all that we have on First Word for the day today. But lots more lined up on the show. We discuss how markets are digesting the threat of the trade war with Mohammed Apabhai of Citi. And we talk about whether the nascent revival in real estate will gather momentum. Gopal, Sarda of Kolte, Patil will be coming up and speaking about that. For now, though, we take a break and come back with full tilt towards the day's trade.
आइसक्रीम ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
सॉरी, आई एम लेट। क्या हुआ?
कुछ नहीं यार, जस्ट वर्किंग ऑन माई एक्सपेंशन प्लान।
फंडिंग का चक्कर।
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख। ला।
अरे।
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल।
हाँ।
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're watching Indian Open. Let's see how the Asian markets are faring at this point of time. And most of them have actually managed to inch up much higher. The Nikkei is up almost 0.7%. Hong Kong markets is up almost 1.5%. We're seeing the Chinese markets are up almost 0.3%. And the SGX Nifty is giving a positive cue. It's managing to hold on to the levels of a 40-point gain. So we can expect a gap up opening. Whether it will sustain or no is anyone's guess. But Navneet is here with the derivative analysis. Navneet, we've seen that yesterday 10,200 seems to be the big support that the market is looking at. How does it look on the F&O side now?
Well, Darshan, good morning. And as you correctly highlighted, the bulls and the bears yesterday were actually fighting for the 10,200 mark, and we also defended the 200-day moving average. So if you look at the indices, Nifty and Bank Nifty, there were no fresh shorts actually built up, because for Nifty futures, the open interest was down nearly 2%. We also closed with a premium of nearly 17 points, which was a positive sign. For Bank Nifty futures, which will just come up on your screen, once again, there was unwinding of nearly 2%, and the futures closed with premium of nearly 80 points. After India VIX surged for 2 straight sessions, yesterday was a day when there was some bit of cool-off seen. So India VIX finally closed still at elevated levels of 15.7, but it closed with cuts of 3%. Let's look at the Nifty PCR then, which has been inching lower in the past few sessions. Yesterday, once again, Nifty PCR went down to levels of 1.08, and for Bank Nifty, it was about 0.59. Why is the Nifty PCR going down? There is more activity seen on the call side in terms of addition. As you can see, the 10,200 call yesterday added a lot of open interest, which is telling you there was a lot of call writing seen here. Not only that, even the lower level strikes have started to become active. So 10,100 as well as the 10,000 call strikes saw some addition. On the put side, unwinding seen for the 10,400 and the 10,300 strike. In terms of open interest concentration, it is at the 10,000 put, and yesterday on the call side, it shifted from 10,500 to about 10,600. What did the FIs do in yesterday's trade? In the last 2 sessions, FIs have been building up short positions. So yesterday they built up both longs as well as short, but net they're still short on index futures because that ratio is 53%. In terms of index options, yesterday once again there was call writing seen, so short bias once again seen on the option side, and they did buy put contracts as well. Both almost 75 contracts were added there. In stock futures, which are the stocks to keep an eye on, Fortis Healthcare, that's out of the F&O ban, and not only that, remember this counter will be coming out of F&O by the end of the March series, so watch out for that. It was down nearly 8.5%. Adani Enterprises, for the second straight session, had a sharp fall. Fresh short positions were seen for this counter, 15% higher for open interest, and the stock was down nearly 7.5%. And lastly, also keep an eye on Can Fin Homes. This counter fell quite sharply in yesterday's session. In terms of OI addition, it was only 6%, but there was some weakness seen. Let's see if there is any sort of further selling which comes for Can Fin Homes in today's trade. Back to you guys.
Well, thanks a lot for that, Navneet. So that's the trade setup for the day. I'm taking a leaf out of the 2 or 3 names that Navneet mentioned at the start of the conversation with Parthiv Shah, Director at TRACOM Stock Brokers. He joins us right now on the show. Parthiv, good morning. Thanks so much for joining here. This is Neeraj here. What's your sense, Parthiv, of how trade is being viewed currently? I mean, almost every single day, when the market starts cracking a little bit towards the close of trade, we see some of these pockets of weakness get more pronounced. The Adani Group for the last couple of days, ADAG, of course, always in the fray. Yesterday, the JP Group started participating, 10, 11, 12%, the kind of cuts. Participants seem very wary about select pockets in these weak times.
Good morning, Neeraj. Neeraj, I am of the camp that, this is an ongoing, it's a correction, it's a severe correction in an ongoing bull market. And whenever we have seen this correction, I think the worst victims have been the companies which are laden with a lot of debt. And I think no two ways about it. Adani Group, I think consolidated group level debt upwards of 90,000 crore. And especially when there are talks about all the lending freezes by many of these PSU banks. And even if I think the management did come out and they were quite vocal that as per them, only 50% of their debt is from the PSU banks, which is by no means a small amount. And even if there's any sort of credit freeze, I think it does create some sort of liquidity issues for the management. Plus, I think some of the companies, not that I'm saying that all the 4 companies have issues, we are most comfortable with Adani Ports and Adani Transmission in terms of the business model and how it can manage to service their debts. But yes, I think again, names like Adani Enterprise do have sets of uncertainty, and they always need a lot of capital. Whether you talk about Adani, the solar business of it, I think if it has to grow, it needs a lot of capital. Even their coal trading business, which has been doing reasonably well, but the margins are not like at all-time high. Their Australian asset, which is still stuck, and nobody is aware of, how the loans there are being serviced, etc. So when these uncertainties take place, and especially when the stock has almost doubled in the last 1.5 years, I think a massive profit taking or a massive sellout is quite evident. So this is not the point in time where we would think of talking of any names which are tainted with a lot of debt, and then there are again cash flow issues, because I think these cash flows can be a big part of the issue, especially when they don't get new credit, and that is how been the modus operandi of these companies. So I think in this market, it's very important to be very, very selective. And again, Neeraj, I remember in 2017, we were always wondering that this market is not giving us an opportunity in the form of a correction. And here we are at a 9% correction. Many small mid caps have corrected by at least 15 to almost 30%. So I think this is a time which we feel, and we are advising our clients to start deploying their funds in good quality sectors where we feel that right now, as we know that private capex has not taken place, but a lot of government incentives are there in many of these sectors. So we are pushing those sectors, and especially companies who have very strong balance sheet, who have strong execution capabilities. I think these are the names that one should have in their portfolio, obviously along with the good management credentials.
Okay, good morning, Parthiv. Darshan here. Can you define which companies you're referring to in terms of quality companies, quality mid caps, companies with strong balance sheet?
Sure. So I think if I have to talk in terms of the sector and the companies, one sector where we are very bullish on is the rural theme. So let's talk about a company like Honda CL Power. I think it's a fantastic company, and it is a company which in the past used to be only in the gensets, and now they're very well diversified in terms of all the agri solutions that they're catering to. So I think they're into things like pumps, they're into things like tillers. All these are things which are used by relatively smaller farmlands, and especially I think farm incomes which are tending to grow up. I think the spend of their disposable income in these companies is going to grow up. It's a company with a rock solid balance sheet, generates free cash flow, only 10 crore worth of capital. And I think if you look in terms of the market cap potential, is quoting at around 1,400 crores worth of market cap. So I believe there's a long way to go. Say a name like VST Tillers, again a company which is coming out with fantastic set of numbers. Yes, one might argue that it's run up a lot, it's a little expensive, but look at the quality of the balance sheet that these companies have. So that's a sector that we're really looking at. Again, I think if I have to look into infrastructure sector, where a lot of government-related work is taking place, a name like PSP Projects, I think you see when it came with an IPO, it was having an order book of only 800 crores, and today it's sitting at order book of upwards of around 2,200 crores. So it gives us a lot of visibility in terms of the revenue growth, and it has proven itself post-listing. I think if you look at all the quarters, they've shown fantastic growth with sustaining very good margins, working capital cycle, despite some stressful times during demon and post-GST. So I think even PSP Projects can do very well. Another name that comes to mind, especially when we talk about things like RERA, real estate, Capacit Infra, I think again this company, believe, has fantastic execution skills. They did have some blips in terms of the margins last quarter, but I believe that I think they can really scale up their business, and as and when they scale up their business, their margins also tends to improve, and I think fantastic management pedigree with using state-of-art technology in their construction projects. So they have fantastic clientele, so I don't believe there should be any issues in terms of receivables. So I think these are the 4 names to discuss out of many names that, they are quality in nature in terms of the balance sheet strength, the management pedigree, which one should use, especially in this market correction, to be added in the portfolio.
Okay, Parthiv, just hold on, our research team is ready. Lots of stocks that we need to watch out for. So Shraddha will be speaking about all the stocks that you need to watch out for. Tata Steel yesterday indicating that they are the front runners to buy out Bhushan Steel. And an interesting note by JP Morgan on Grasim, which they talk about, standalone business as well as the holding company discount narrowing. So Jayesh will speak about that. But Nikki, first, Tata Steel, what they've come out indicating that they are the front runners to buy Bhushan Steel. How does it benefit it? What happens now?
Sure. So they've put out a release where they said that they've emerged as the highest bidder for Bhushan Steel. That is as per the press release, and they've received this formal communication from the resolution professionals of Bhushan Steel. Now remember that back with this was a Bloomberg Quint exclusive where Tata Steel, it was reported that Tata Steel has offered to pay as much as 45,000 odd crore for Bhushan. Out of this, 30 to 500 crore would be towards your repaying financial creditors, 1,200 would be towards operational creditors, and nearly nearly 9,000 crore would be for working capital needs. How would that help Tata Steel? It'll help consolidate presence in East and also will up its capacity to 18.5 MTPA from its current 13 MTPA, which would be in line or probably a little more higher than JSW 18 MTPA capacity. In terms of product mix, you will see higher share of flat products, given that 72% of Tata Steel's portfolio is right now towards flat products, and also will increase its share towards high margin automotive products. Besides that, the valuations right now seem to be on the higher end, given the 45,000 crore amount that we are working with. However, it would not strain the balance sheet, given that even if you service the debt at 45,000 crore at an assumption of 8%, this will come to a tune of 3,600 crore, and with an EBITDA of nearly 5,040, this will still be able to kind of fund the kind of amount that the company is required to acquire for this company.
Okay, and Shraddha, which are the important stocks that we need to watch out for today?
I've picked 5, starting off with HDFC, which will sell 5.1% stake in CAMS for 169 crores. They will continue to hold another 5.99% post this stake sale. You also have an ET report which says that Heineken is looking to buy United Brewery shares of Vijay Mallya, which was seized by the Enforcement Directorate, and with that purchase, they will be able to raise their stake in the company from 44% currently to 58.2%. So watch out for that name. It's a proposal and it's a ET report. Pidilite Industries has partnered with the German company, exclusive distribution and sales tie-up for India and some of the neighboring countries for adhesives. Torrent Power has emerged as the winner under reverse e-auction for setting up a 124 megawatt project in Maharashtra. Gayatri project is an interesting one. The QIP opened yesterday. They've set the floor price at 211.65 per share. There's a 3 to 4% premium to yesterday's closing price. You could actually see some positive reaction there. And lastly, Stride Session will launch anti-ulcer OTC tablet in the US market, ranitidine, for which the market size is said to be close to $200 million. So again, some positive reaction.
Okay, so we'll watch out for those stocks. And interesting note on Grasim. So what does JP Morgan have to say?
Yes, Darshan. So what they said is that they've revised their target price upwards from 1375 to 1450 per share. They believe that at current level of about just over 1100, it's an attractive risk-reward ratio for Grasim. Now, you know, the trade it's trading at 52% holding company discount, which is near its all-time high level. And the discount is despite strong operational performance and receding capital allocation concerns. They also believe that there's strong improvement, substantial improvement in the standalone business for the last couple of years, and they have a large capex plan of about 6,500 crore over 3 years in the high ROCE business, the return on capital employed. And also they believe that Idea's recent capital raising plans allays investors concerns of meaningful investments in the company. So all in all, looks positive for Grasim.
Okay, so Grasim certainly watch out for. Parthiv, any view on Grasim, especially in terms of the holding company discount that it has currently?
Yes, Darshan, we are positive on Grasim, and I think let's understand its core business, which is the viscose fiber business. I think one of the raw material components that goes into this business is caustic soda related derivatives, and I think if you look at this group strategy, they have been continuously acquiring assets for caustic soda, starting with BR Caustics and many other plants which are not like in the listed space. So I think they are focusing a lot on that business. They have some capex plans in the BSF business. And more importantly, I think cement is a theme they're extremely bullish on. If you see in terms of resilience, despite this market fall, I think UltraTech Cement has not really corrected big time, because market is aware of the fact that once they consolidate their entire capacities along with the JP associate group companies, I think the efficiency that UltraTech management can put into in terms of squeezing out the highest EBITDA per ton, I think that's going to be the key role going ahead in terms of cash flow generation from that business. And despite the holding company discount, I think one can't write off the 62% stake that they have in UltraTech Cement, which brings in a lot of value, and it's going to touch almost 100 million ton capacity, which is going to be highest in the country. And I think talks about the ACC and the Gujarat Ambuja merger still at bay. So I think UltraTech is going to be a very, very prestigious asset for a player like Grasim. So overall, I think Grasim is a fantastic stock to own in such a market where I think there is a capital protection theme going on in this market where there's a lot of correction taking place. So we see very limited downside in a player like Grasim, but going ahead with the economy picking up, I think a player like Grasim can really benefit out of it.
Okay, so many other stocks to talk about with Parthiv. Stay on. Let's delve into technicals though. It's 8:45, the time of the show when we get in our technical and derivative experts to try and figure out how are they approaching trade today. Kiran Jadhav, Chairman and Managing Director at Kiran Jadhav and Associates on the show, as well as Sameet Chavan, Chief Analyst for Technical and Derivatives at Angel Broking on the show. Gentlemen, both of you, good morning. Thank you so much for taking the time out. Sameet, let's start off with you. How are you viewing positions on both the key indices? We may have a bit of a start in the green today, but does it look like the broader trend is downwards, or 6-7 days of a correction bring us to levels from where there is a chance of a pullback?
Good morning. We have been quite cautious on the market since last 3-4 weeks, and ever since we breached important support level of 11,000 during the first half of February. Since then, we have been witnessing this corrective move. After a consolidation of nearly couple of weeks, day before yesterday, we saw a decisive breakdown below important support level of 10,300. So that was clearly a trigger point. Yesterday we retested at 200-day moving average place around 10,140. So probably we are trading around important junctions. So probably that's the reason we might see some kind of consolidation happening. But we don't expect Nifty to surpass now 10,300, 10,350 quite soon. So any bounce back probably toward 10,240, 10,260 would be a good selling opportunity. And we are likely to head toward 10,000 quite soon. And probably if I have to take medium-term horizon, then probably we are entering a 4-digit territory quite soon. So as far as directional view is concerned, we would stick to a sell and rise kind of strategy. Probably for the day, we might have some kind of consolidation wherein you will see a lot of individual stocks, that would be outperforming. So we would be closely tracking individual stocks, and that have already hammered down. The possibility of some kind of relief rally seeing in those stocks is quite high.
Okay, good morning, Kiran. Do you believe that this is a sell-on rally type of market? Do you believe that a 4-digit is possible on the Nifty, or you have a contrarian view here?
No, if we look at the medium-term outlook, the market is into a corrective move, and we expect the Nifty to go into the 4-digit for sure. But for today and tomorrow, we believe that we should see a good kind of bounce back. There are 2-3 reasons for it. First is the PCR ratio, which is at almost all-time lows. And from here, we expect a bounce back because of this. Second is on the Nifty and the Bank Nifty, we have a congestion of supports. So we don't expect the markets to dip down immediately. We will see a kind of pullback or a time correction that will happen. And with the kind of shorts that were built up yesterday, we believe that the short traps would happen if the Nifty sustains about the 10,200 mark in the first couple of hours. I have a target of around 10,250-60 levels for today, and if we sustain above that, we could also see the pullback continuing to 10,300-320. I don't expect the markets to move above this because 10,300 has been the breakout level of the 1-month consolidation that we have seen. So the testing is very important, which would happen, and that's the reason why I have a buy call for today. Stop loss would be around 10,150, target 10,250.
Okay. Let's talk about specific stocks. Sameet, what's on your radar today?
See, as I've just highlighted, we are concentrating on those stocks, that have, corrected quite sharply in the recent past. So first buy would be on Union Bank. Clearly, this has been one of the underperforming stock, and it is now poised for some kind of relief rally, trading around its important support levels of 90-93. And yesterday we saw doji formation on daily chart. So it calls for a low risk buy at current level. We expect a decent bounce back toward 105, 108, probably in next 2 to 3 days. One can go long with a stop loss somewhere around 93.50. Second buy would be on V-Mart Retail. We have been quite upbeat on this stock since last couple of days, and ever since we saw breakout happening from a resistance of 1700, we've already seen a good jump in this particular counter. Momentum is quite strong, and it has been outperforming the benchmark index. So we expect this momentum to extend. Immediate target would be around 2045. It can be bought with a stop loss of 1840, and our solitary sell call would be on Container Corp. On Tuesday, we witnessed a decent breakdown below its near-term support levels of 1970, 1270, 1280 on a closing basis. Yesterday, we saw some kind of breather, but we would interpret this as a good selling opportunity. We expect the stock to slide towards 1195. One can go short at current level. keeping a strict stop loss around 1290.
And Kiran, what are you seeing on the markets? Which are the stocks that you're recommending?
See, the way I look at the market is we are expecting a pullback rally, and the stocks which have outperformed in this fall are the stocks that I've tried to pick up. The first stock would be Dalmia Cement, Dalmia Bharat, where we believe that we are going to see a good kind of pullback from here. The strong delivery marking has been happening in the base formation that has happened. A buy call at the current market price, stop loss is 2680 and 2780 would be today's target. We have seen an open interest addition of around 6% in this counter as well. So we believe that there's a good amount of strength that is happening on this counter. Second would be Ashok Leyland, a clear positive divergence, a strong delivery marking. At the same time, the stock has been clocking higher tops and higher bottoms. A slight move above the 135 mark, 36 mark will ensure that the stock goes to 147, which would be my first target, and my target stop loss would be 138.50. Voltas would be my next buy on strong open interest additions of 17% and the derivative data. At the same time, strong delivery marking. One should buy Voltas with a stop loss of 623, a target of 644.
Okay, on to our special segment. Stay on, gentlemen. On to our special segment, Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on the radar today?
Neeraj, I don't have a stock, but a very interesting chart that we have. But first, let's understand how the relative strength index concept actually works. Well, the RSI actually measures the momentum behind the price moves, and it helps you to identify the overbought and oversold levels. Why these conditions are important, or this theory is important, we'll get to that. But a few more conditions that you have to watch out for is that when the RSI is above 70, the stock may be overbought, and below 30, the stock may be oversold. Now let's go to the chart that we have, bearing in mind those conditions. Well, it's not a individual stock that we have, but rather a combination of all the Nifty 50 stocks. And what we have on the screen is that the percentage of members that have been overbought or oversold, that is the historical trend we have. So the white line gives you the percentage of Nifty stocks where the RSI is below 30, and the blue panel shows you the percentage of members of the Nifty which have the RSI above 70. What you need to focus on is the recent 20 days that we have, the red box that we have. You can see that there is no blue line, and there have been only white lines, which means that for last 20 sessions, there is not a single Nifty stock that has been overbought in the market. And a similar kind of pattern had been formed way back in 2016, where we had 22 sessions where none of the Nifty stocks were overbought, and the pullback rally post such a period was nearly 10%. Now we had similar instances in late 2016 during the demonetization period. So the pullback rally post this period was nearly 3 to 5%. So one can expect that if the market actually bounces back, you could actually look at those kind of rallies coming in for the market.
Interesting. We will watch out for all of those patterns as well. Thanks a lot for that, Jayesh. So that's a fair bit of analysis on what could happen on the index as well as specific stocks on the technical front. I want to draw attention of viewers to 2 or 3 pockets. Firstly, Telecom. There's big news that has come out. Parthiv, you would have taken stock of the news flow around Telecom in the session today, or rather that has come out overnight and will impact stocks in the session today, whether the deferred spectrum payment extended to 16 years or even this 50% band cap that's been removed as well. The stocks have been under pressure. Could there be a meaningful pullback as a result of this?
My sense is that yes, it is definitely helpful to the incumbents vis-a-vis a name like Reliance Jio, but I think this is really not going to be like game-changing in terms of changing their fortunes, because I think the biggest issue with the telecom sector is the predatory pricing that Reliance Jio has come out with, and especially one was expecting that post their acquisition of the subscriber in terms of the market share gains that they were eyeing, I think they would rationalize their prices. But I think when we look at their phase 2, wherein again the pricing has been extremely aggressive, and they do have deep pockets, nobody nobody can deny that, and that is really creating a lot of issues for the incumbents like Idea, Bharti Airtel, and this is despite a lot of M&A that we already seen. Now players like Union, Aircel, Tata Tele, all are out, and despite so much of consolidation, I think we're still seeing that these telecom carriers are struggling to generate higher, especially the data ARPU. So I think it's not to help their cause in terms of better cash flow generation. And this is at a point in time when the incumbents like Idea, Vodafone, even Bharti Airtel, I think they are facing a lot of network-related issues in terms of the call drops, etc. And that is because they're not being able to read out the capex into their network RF planning. So that has been a key challenge for these players. Plus, they do have to scale up their 4G networks, which is still not kind of pan-India, and all the money that they pay for the spectrum license fees, etc. So I think it's going to be challenging times, and unless and until I see Reliance Jio, which is right now kind of dominating the market, rationalize their price to earn better margins for their own benefit, I think I don't see the telecom sector really re-rating from here. So I think at the best it would time correct, if not go down further. But I think that's a key one will have to watch, that when will Reliance Jio change its pricing strategy and earn better in terms of the margins, because they also eventually will have to justify the ROE on this huge 1.5 lakh crore investment. So I think I'll be eyeing that. Until then, I think it's better to play telecom sector via telecom proxies, name like Sterlite Technologies. I believe this is a company which has its own niche. It's not only a fiber optic player, but also a telecom solution provider, and getting contracts from the defense over 3,000 crore is just the start. And I think the earnings can really grow by around 25% CAGR growing from here over the next 3 to 5 years. They are expanding their capacities, and we've seen what returns the stock has given. So despite it might look slightly expensive on the face of it, but we have backing from the earnings growth and the business verticals that they are into. So I think I would prefer Sterlite Technologies as an investment play proxy to the telecom theme vis-a-vis the telecom incumbent carriers.
Sameet, any view on the PSU banks? Most of them are trading at fresh 52-week low. Anyone can give a probable bounce back?
See, in my recommendation list, I have already included Union Bank. So I expect a decent relief rally. Stock is trading around its important support level. So risk to reward ratio is quite favorable. Hardly you can keep a stop loss of say 2 and 2.5 rupees from current level and expect a decent bounce back of at least 10 rupees from current level. So I would go long on Union Bank, keeping a stop loss somewhere around 93.20, and I expect a target of 105, 108.
You would go long on your Union Bank. That's a brave call, Sameet. Does it extend itself to the Nifty Bank either also?
No, I'll avoid Nifty Bank. Clearly, recently 24,700 was acting as a very strong support, and on Tuesday we've already seen a decisive breakdown below that. So as far as Bank Nifty is concerned, any pullback towards say 24,500, 24,700 would be a shorting opportunity. Immediate level that we are expecting is 24,000. It has already reached 24,100. We expect Bank Nifty to slide below 24,000 quite soon.
That's interesting. Yeah, I was listening to Yatin bring out this valuation argument as well. Now, I don't know what's the sense that you get from people that you speak to, but from anybody that I've spoken to, fundamental people are shying away because they're saying that, yeah, the book value may be, the price to book may be 0.2, 0.3, but we don't know what's in that damn book. What if more skeletons come out and this worsens further?
Yeah, that's exactly the point. This was just a tip. See, the point is people say that probably Nirav Modi could be the tip of the iceberg. You don't know what's hidden down. So I think, and that is why, you're seeing that, even private banks like ICICI and Axis are taking it to the chin, while Kotak moved up yesterday in trade. So HDFC Bank, Kotak, they're standing tall, while even some of the private banks are feeling the heat now.
Despite the clarification from ICICI that there's no exposure to Nirav Modi.
There's no exposure, and the proof is there that ICICI Bank officials have been called to SFIO. The Axis Bank officials were called. So there is something cooking. They can deny it all they want, but in the end of the day, people will take such news. And to be fair, as ICICI Bank and Axis Bank don't have the best of asset qualities. That's what the financials show. But so I think people are a little skeptical about some of the banks, and that is why you saw yesterday Kotak overtook ICICI's market cap, became the third largest private sector bank in India. So there seems to be a lot of traction in some of these banks.
Well, 1,085 for a Kotak, but yeah, and we'll talk about this with Parthiv in moments from now. But 22 seconds to go, Darshan. Let's take stock of what the pre-open rates could look like.
Yeah, so I think telecom is something that we need to certainly watch out for. I think SGX Nifty has managed to move up even further, but you know, as usual, I think we've seen it for the past few days. The start is decent, by the end of the day we get clobbered. I think for the past 3 days we've had close to 100-point gap down every day, close down. So let's see what happens today.
Yeah. Okay, so these are pre-open rates and starting off flat, but the SGX Nifty, if it's any indication, we'll have a start which is about maybe 0.2 or 0.3 or 0.4% in the green. Now the Nifty showing about a 49-point uptick. Bring up the telcos and let's see how they are starting off. Those are companies which have news to themselves. Idea 4%, the first tick. Bharti Airtel should be interesting too, maybe 2-3%. 4.5%, excuse me, 422. These are first ticks. These will stabilize, but for now it seems like they'll start off on a positive note. So now at 10%. I don't know if a 10% rally is in offing or not, but certainly starting off on a positive note are the telcos. Interested in seeing what some of the corporate-facing banks are doing in session today. SBI, ICICI Bank got butchered in trade, 3.5%. I'm using the term butchered too aggressively maybe. Let's just say they corrected quite strongly in trade yesterday. In today's session, seem like they might bounce back, but let's wait and watch. This is also because the Nifty is showing a 70-point uptick. This will stabilize a bit, and yeah, on cue, some of these have come off as well. Last but not the least, United Spirits is one stock that I want to see. The Bloomberg Quint story clearly stated that the 18% duty is in the offing. The caveat only is that the stock is corrected quite a bit. But let's wait and watch if during the course of today, tomorrow and Monday, when the announcement is officially out, whether United Spirits corrects further from these levels or not.
I think United Breweries will be interesting. An ET report today indicating that Heineken is looking to up its stake to over 54% by buying the shares of Vijay Mallya which are with the Enforcement Directorate. This is source-based information as per ET, but the counter certainly reacting. I forgot to mention, but yesterday commodities were clobbered on the LME. Most of them were down over 2%. Even if you're looking at China currently, steel is down 2%, aluminium is down 1%, copper is down 1%. So interesting to see some of the metal stocks react. I'm surprised that they have opened with a gap up. Tata Steel has reasons of its own in terms of getting the Bhushan being the highest bidder. They haven't got it yet, but metals will be interesting to see. TeamLease, interestingly, a big block deal. Indus India Fund bought in stake, in which HDFC Fund sold in the stake, so that will be interesting. Telecom stocks, let's see how they have reacted. Idea particularly I'm interested to see. So Idea is up almost 6%, so that is interesting to see. JSW Steel, just can we bring that up, because the promoters bought in almost 5 lakh shares in the last 2-3 trading session. Raymond promoters have been acquiring shares of the company. So these are interesting things, not these are small things, you know, but it's an important thing when promoter himself buys stake in the company. Grasim, let's see how the JP Morgan report is being taken. The target price is 1450. So let's see if Grasim has managed to open with a positive bias. Yes, with a positive bias. Motilal Oswal initiates on Aegis Logistics. A 33% upside is something that they believe. 7%. Motilal does have a wide distribution network, so the retail participation is good. Angel Broking on Ashok Leyland, target price 163. It's a well covered stock. I don't think the reaction will be that high, but nevertheless a 2% upside. So I think the start is decent. We'll need to see. The Nifty is indicating a 70-point uptick, but I think it could pretty much cool down by the time we open.
Yeah, let's wait and watch. But 902 or 903, Saloni Dhanuka joins in with the big brokerage calls of the day. Saloni, good morning.
Good morning, Neeraj. So on brokerages, first up we have Motilal Oswal on Aegis Logistics. Now they initiate buy with a target price of 303 rupees for the stock, which suggests a potential upside of more than 30%. Now Aegis Logistics is India's leading oil, gas and chemical logistics company, and they believe that Aegis will benefit on the back of rising consumption and increasing import demand in India. Elsewhere, increased output in Haldia and Pipavav terminals will drive the throughput for the company, and they expect LPG throughput, EBITDA, EPS to grow at a CAGR of at least 40% each over FY17 through FY20. Motilal believes that major capital expenditure plans has been executed by the company, and they expect Aegis to generate strong free cash flows going ahead. And a key thing to watch out for Aegis Logistics, according to the note, is that they expect management to announce new gas terminal plan in the coming days, and their bull case target price for this stock stands around 342 rupees, which suggest a potential upside of more than 50%. Secondly, on brokerages, we have Angel Broking on Ashok Leyland. Now they initiate buy with a target price of 163 rupees for the stock, which suggests a potential upside of more than 15%. Ashok Leyland is a flagship company of Hinduja Group and one of the leading commercial vehicle manufacturers in India. And also government has recently announced a scrappage policy for commercial vehicles of older than 15 years of age, and they believe that this will trigger the near-term growth for the company. And Ashok Leyland is set to capture additional growth opportunity on the back of improved rural demand post the GST disruption, and a boost in e-commerce demand will drive the growth for the company according to the note. And they expect the company to launch one product in every 6 months, and hence they expect net profit to grow at a CAGR of over 19% through FY17 through to FY20 on the back of improvement in replacement demand, Neeraj.
Watch out for these. Thanks a lot for that, Saloni. Parthiv, do you track the logistics space and Aegis Logistics in particular?
Yes, I think, Neeraj, what I feel is that a company like Aegis Logistics is a direct proxy to your economic growth revival. And yes, I think of late we have seen many green shoots in terms of these logistic players who are catering to the needs of many of their end customers, whose utilization levels and demands going up. Definitely aids a player like Aegis Logistics who have this asset base being set up. And trust me, it's not really easy for a competitor to just come there and set up a parallel sort of a logistic infrastructure the way Aegis Logistics has over the period of so many years. So this is the moat that I feel that companies like Aegis Logistics do have. And with bulk of their capex being over and the utilization levels going up, as very rightly mentioned in the report, the free cash flow going up, these are the type of companies that the market tends to love and tends to re-rate in especially the logistics space, which is otherwise a very capex heavy segment. So yes, this is a stock that we like, and I think definitely going ahead we find that the earnings momentum will be there, which will drive the current, justify the current valuations and even re-rate further.
Kiran, any view on United Breweries? The counter has opened up, positive news coming in. Do the technicals support the up move?
Yes, of course. A very strong support does exist at around the 1015-1020 mark. And there's a good kind of base building formation that has been happening over the last 3 months or so. So because we are at the supports, we expect a bounce back to happen on this counter. The first resistance would come at around the 1080, 1090 levels, which should be the first target. And if eventually, if the stock manages to move above this level, then we would see the average highs of 1180 to be tested.
Okay, actually, I want to see what all of these companies are up to. One is UBS, because that's sort of individual news, but United Spirits, Som Distilleries, this whole bucket, I mean, we don't quite know how much will get impacted, how, but all of these stocks not quite reeling under pressure. Som Distilleries cracked about 4-5% in trade yesterday. Radico Khaitan is up about a couple of percentage points today, so that has recovered a little bit. This one too about 1.5% higher, so not bad going. Parthiv, we learn, Nikunj Oriar reported yesterday that it is very likely, sources have told us on condition of anonymity, that ENA will be brought under the ambit of GST. What kind of an impact do you envisage on the different players, be it spirit companies, be it brewery companies? Do the brewery companies get impacted in a meaningful way too?
See, Neeraj, I think I believe that in terms of the demand for all these players, and especially post the GST era, I think definitely things are going to streamline, and we know this is a segment where there is definitely a huge chunk of unorganized market, maybe what we call in very plain simple terms as the desi liquor. So I think many of these players are going to have a very, very hard time if they are brought under the ambit of GST. And yes, I think there will be some costing that these players will have to work out, and especially players like United Spirits, who have been focusing a lot on premiumization. These are the type of names that one should own in the portfolio. The only reason being they are not someone who are chasing the volume growth story and trying to capture the entire market share in the country, but they are the ones who are trying to capture the highest market share in the premiumized category. And that is evident from the fact that even when you hear the con call from Diageo, I think they are targeting India as a country where they don't want to have a huge market share, but they want to have the highest market share in the premiumized products. And that is a very resilient business model, in my opinion, despite any of the regulatory changes, despite any of the taxation related changes. So I think on any declines, a name like United Spirits, if one wants to play this theme in terms of the corporate governments now with Diageo being at the helm, I think it's a safest play, and I think this can definitely compound wealth over the longer horizon.
Okay, we're just minutes away from the market opening when we'll tell you all that is you need to know to stay ahead in trade today. Tata Steel identified as the highest bidder to acquire Bhushan Steel.
And Heineken looks to buy. Enforcement Directorate seized Malia shares in United Breweries to raise stake to 58.2% from 44%, according to an Economic Times report.
Cabinet approves two key measures in the telecom sector with increase in timeline for payment for spectrum. That is positive for companies like Idea and Bharti Airtel.
Motilal Oswal Securities sees a 33% upside potential in Aegis Logistics, while Angel Broking sees a 16% upside potential in Ashok Leyland.
CCI imposes penalties on airline companies for concentrated action in fixing fuel surcharge on cargo transport.
And JP Morgan raises price target on Grasim to 1,450 rupees per share as holding company discount is near all-time highs. Well, a set of stocks there, which all of which could be, in fact, showing signs of a reaction that we'll see. By the way, as the pre-open rates have settled, Adani Port looks like it'll start off on a positive note, which is not a bad sign, frankly, considering what it's been going through the last few days. But the top gainer seems to be Bharti Airtel. Sameet, Chavan at 411. Is there a trade in Bharti Airtel? It's starting off 2% higher. Would you initiate a fresh trade at about these levels?
See, as a disclosure, we are not seeing this particular counter as a trading bet, but if we have a medium-term view, then we are quite upbeat on this stock, and we have already recommended this to our client when it was around 420, 425. Yes, the stock has slipped a bit, but with a slightly broader perspective, we expect the stock to head higher. If we look at the monthly chart, the entire correction in last 3 months, we can interpret this as a good pullback move towards its important support levels around its previous breakout point as well. So 400, 380 according to us seems to be a very strong base, and from here on we would expect a decent up move at least in next 3 to 4 months. So with a slightly broader perspective, yes, one can go long. With a trading view, 425, 430 seems to be immediate hurdle.
By the way, I think the counter that has really set the stage on fire on the BSE 500 is Bhushan Steel. Tata Steel's announcement on the Bombay Stock Exchange seems to have really revved up. Remember, their bid was fairly aggressive, and that's leading to Bhushan Steel doing what it is doing right now, 16% higher. Tata Steel has a minor uptick too, but Bhushan Steel is really zooming up in trade. It's a stock that had fallen quite a bit too, so a bit of a bounce back out here. But
if I read right, I think no banks will take a haircut on Bhushan Steel. At least I think if I read right, I think that was what I read. But Deepak Fertilizer is another one. If you saw just one stock in the Nifty in the red, and that was Ultratech, and that's also minor. So I think the start is good for the markets. Let's hope it continues. Deepak Fertilizer is up 10%. Vakarangi continues its good run, so I think it's a fairly decent opening, but time will say what happens.
Yeah, let's see if indeed this is one another day wherein we start off in the green and then eventually end up in the red. Maybe we'll talk about Bhushan Steel with Parthiv post-market open, because we are perilously close to the market open rate. So let's take in the stock of the top call from both our technical experts, maybe an index view too, but one top stock for the day. Kiran, Jadhav, if you had to bet on one stock for the day today, which one would that be?
Dalmia Bharat would be my one pick that I have recommended earlier as well. 2680 would be my stop loss, 2780 would be my target.
And Sameet, any top call from you after seeing the market open?
See, we have already discussed about Union Bank that is poised for a decent bounce back. The other call which I like is VMart. Clearly, it is trading around its all-time highs, poised for decent up move. So we expect the stock to head toward 2045, go long with a stop loss of 1835.
VMart Retail. This one had a big move a day before yesterday, if I'm not wrong, some 10-11%. Yesterday was a bit quiet, but V-Mart Retail as a trading idea from Sameet, that's interesting. And Dalmia Bharat as a trading idea from Kiran Jadhav. 30 seconds to go. Maybe I can squeeze in a quick index question. Sameet, 10 odd seconds, but 10,216. Would you go short on open?
No, not at this level. If it reaches somewhere around 10,240, 10,260, my risk to reward becomes quite favorable. So I'll go short around 10,240, 10,260.
Okay, if it reaches those levels. Stay on, gentlemen. Lots more to talk about. Kiran and Sameet, request you to stay on. There's lots more to talk about. The market's just getting started. Lots of specific stocks, and we should talk about all of those with our experts once the market's open. But, well, a good start. Almost identical for all the three key indices, the Nifty, Sensex, and the Nifty Bank, starting off about 0.7% higher. That's a really strong start that we've had. Let's hope it lasts. In fact, building on strength now, 0.8% now for the Sensex. So good going really for all the key benchmark indices. I would reckon the mid caps and the small caps too would have about 1% or slightly less than 1% kind of a rally. Yeah, slightly less than 1% for the mid caps, 0.5% for the small cap index. This one tends to start off very, very slow, as we saw in trade yesterday, but tends to fall more than the large caps when it does fall. Well, it's an all green screen. I doubt it will stay like this. I'm hoping I'm wrong for the bull's sake. But we've started off very, very well. Let's just see if this lasts or no. But it tells you that almost every stock worth its salt is in the green. No point in pointing out what has done better than the others. Banks, Reliance, a lot of bounce backs being seen there. IT would be slightly sluggish than the others because the others are participating. But an all green screen, which is actually a good sign. Let's take stock of 3 or 4 pockets before I hand it over to Darshan for the broader market check as well. But I think the telcos firmly in focus, couple of percentage points for Bharti, 4% for Idea. The regulatory boost clearly proving good for both of the companies. Good start for Bharti as well as Idea. What else? I think yesterday's top losers are all starting off in the green today. Let's see if they last. So Adani Port, Adani Transmission, Adani Power, Adani Enterprises got clobbered yesterday, but are up in the session today. 2 sets of stocks in news or brokerage calls, as the case may be. One is whether ENA comes under GST, and our sources tell us that it will. United Spirits has fallen quite a bit, just a bit of a somber start. On a day like this, United Spirits isn't exactly starting off all guns blazing. Last but not the least, the Motilal Oswal note on Aegis Logistics, a target of 303, and Aegis starts off 7% higher at 244. Darshan?
So Bhushan, as you and Aegis, you pointed out, Deepak Fertilizer seems to be consolidating. It's up almost 6%. Unitech is moving up. IDBI again continues its good run. Fortis, it's out of the FNO ban, so again there will be traction. So Fortis is managing to do well. Apart from it, Kitex is up in trade. Phoenix Mills is doing well. Adani Transmission is doing well. Sugar is not having a very good day again. You know, some of the sugar stocks, Balrampur Chini continues to bleed. It's down another 3%. REC and PFC again at fresh 52-week low. So there seems to be negative views that are coming in. Yes Bank is the top nifty loser. It's down close to 0.5%. Followed by NTPC. So that's the view. Surprisingly, ICICI Bank is up 2% in trade. The telecom stocks have given up quite a few of their gains. So that's what I can see as of now. Nothing too much on the mid-cap side of the market, Neeraj. Except for Bhushan Steel and Aegis Logistics, I don't think there is. Videocon's down 5%. So there's not more to talk. It's just 12 rupees and a lot of rumors doing around, but I think the management clarified that they are in India. So I think some of the Adani Power is down in trade, GVK Power, some of these smaller counters. Natco has had a bad run of late. It's down another 1%. So that's what I'm seeing.
Yeah, and well, Balrampur Chini has been taken to the cleaners, to be honest, the last few days. Not a happy run for this name either. ICICI Bank has a strong bounce, about 2.5% higher. Good start to it. Okay, gentlemen, first calls. Kiran, I'll come to you first. Anything that pops up on your screen, the first 3 minutes of trade, either on the index or on specific stocks, anything that looks interesting?
Yeah, Godrej Agro looks better on the charts. Strong volumes for the last 4-5 trading sessions with a small correction for the last 2 days, and once again it is moving higher. So we believe that this is one counter that we can go long on. Stop loss will be 660, target should be 685 to begin with, and we could still move further up from these levels. Second counter which looks good to me is Phenolics Cables. You know, generally a thinly traded counter. But today is somehow we believe that a strong momentum is being built on this counter. I would go long on this counter. 702 would be my stop loss. 720 would be my target.
Sameet, any observations? We're starting off about 70 points higher for the index and the Nifty bank to about 143.
See, as far as stock is concerned, V-Mart has already moved nearly 2.5%. So its peer counter, D-Mart looks good at current level. It is poised for an intraday breakout beyond 1333. So I'm looking for this particular counter as well. So one can go long in D-Mart as well, keeping a strict stop loss somewhere around 1285 and expect a decent move probably toward 1375, 1380.
Parthiv, what seems to be plaguing REC and PFC? Both of them are trading much weaker. Is there fundamentally something wrong with these counters, or the fear of exposure to some of these, Adani stocks or the other stocks that is keeping them, rather weak?
Yes, Darshan, I think you absolutely rightly mentioned that there is a fear about like what we saw in many of the PSU banks. The scare of the hidden loans which are not going to be serviced going ahead in time. So probably market is taking a stake of that, and I think we know for the fact that still there are many discoms, state discoms, which are struggling, and I think REC, PSCs of the world have also lent to many of these discoms. And despite the Uday scheme, which has, I think, done some relief, but it's not like been a game changer in sorts, wherein the discoms have all of a sudden turned around their balance sheets. And plus many of the private companies, I think, where they have these assets, which have this PPAs where I think they've not been able to kind of justify the costs, especially with the elevated cost of the imported coal, etc. So I think I've never been fans of these government-run NBFCs because like the value destruction that the PSU banks have done, I think one wouldn't be surprised if even similar thing takes place. And till date, I think for the sake of it, there have been companies which have been giving fantastic dividend yields to the shareholders and also showing fantastic set of numbers, reasonably good ROEs. But I think all of this can change for the worse once I think things are exposed out. So I think best to stay away from these names, and especially we're not fans of NBFCs which are lending to only one vertical, which is the power and power related thing.
Parthiv, you would have read that announcement that came out from Tata Steel on the exchanges as well. Bhushan Steel is flying high post that announcement. If for a lot of people who might be minority shareholders of Bhushan Steel, what would your advice be currently?
See, I think this is a good deal for especially the lenders, because ever since Tata Steel has cleaned up its act in the European markets, they have become very aggressive in the Indian domestic markets. And I think if we look at the commentary that the JSW Steel management gives for any of their inorganic acquisitions, they would love to see a ROC of around 18 to 20% to justify that acquisition. And the price that they quoted came at around 26,000 crore. What Tata Steel is paying is somewhere around 34,000 crore plus 9,000 crore of working capital. So that comes to almost 6,200 crore per million ton of Bhushan Steel's assets, which is, I think, very good, especially when one knows that Bhushan Steel was a distressed sale, and despite that Tata Steel has given out a huge price. So I think Tata Steel has been very aggressive because they were left out in the race in terms of being the largest steel player in the country. And now with this acquisition, and especially Bhushan Steel before their 5.5 million capacity in the automotive steel, they did have plans to go right up to additional 3 million tons. So that is something for which maybe Tata Steel would have paid a premium for, that Bhushan Steel's capacities can be expanded further 40%. But I think for the Bhushan Steel shareholders, I think at this juncture, especially now that one knows that Tata Steel is an acquirer, I think let's see what takes place in terms of what sort of deal arrangement it is for the common shareholders, because they are the worst affected lot. So if at all, maybe I think there could be a share swap wherein the Bhushan Steel shareholders do tend to get Tata Steel shares. But I think it's better to hang on to it because now at least they have some life support in the form of Tata Steel. But going ahead in time, one will know whether this acquisition price by Tata Steel was attractive or not. But I think, yes, I believe at the current phase of things, Tata Steel has had a very aggressive bid for Bhushan Steel.
Let's wait and watch what happens and how it unfolds. Gentlemen, all three of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate you being with us. As we speak, the Nifty bank has cooled off a little bit, but the Nifty and the Sensex still holding out about 0.7% higher for both of these key indices. We need to slip into a very, very quick break. But up next, we digest the impact of the threat of the trade war with Mohammed Apabhai of Citi and talk about what is his view on what will happen during the course of the month, arguably the course of the year as well.
job, अरे 5 to 9 job, भाग दौड़, all the time job. The roaming wala job, the deadline wala job, or are you living in the market wala job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted recognizing liberty, equality and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
With Indian Open right here on Bloomberg Quint, the Indian markets are doing okay, but 2018 has not been a great year for global equities, and the impending threat of a trade war is not making things any better. So what should one do in times such as these? Well, the head of Asia Pacific Research, head of Asia Pacific at Citi, Mohammed Apabhai, joins in right now to give us his thoughts on the same. Thank you so much for taking the time out and speaking with us, Mohammed Apabhai. You know, the US Treasury Secretary spoke to Bloomberg late last evening, and he mentioned that this is on count this week. We will see the imposition of the tariffs. Albeit there is thought that Canada and Mexico might be exempted as well. So there's a bit of a pull down from what the earlier stance was. How big an impact on asset markets would a move like this have, to your mind?
Yes, good morning. I think that the impact is potentially quite significant. It really depends on how it is introduced and how it is imposed, and also how deep it goes and what the retaliatory effects would be. All the while we have in our minds what happened in the 1930s when there was the introduction of tariffs and it turned a recession into a depression. I don't think anybody really wants to go down that route, but I think that there is not some, I wouldn't really call it protectionism, but I think some rebalancing of the trade relationship is probably what is going on. I think the really interesting question is what the other trade partners actually do, especially in terms of not so much with the steel and the aluminium, but more in terms of the sectors that would hurt the region more in technology, for example, or in manufacturing. Those would be far more significant, whether it's at the autos or mobile phones or computers or that sort of broad tariff. Now, I think the interesting thing is that Mr. Trump is executing on the things that he did warn us about on his website after he got elected. So I think that they are quite serious about many of these issues now.
The market will start pricing in what these heads of states have spoken about in the last maybe 72 hours on social media and otherwise. I mean, in answer to Trump's comments, the EU gave out a comment about what they could do, and Trump speaking about cars. So if talks were actions, then we are already in a serious trade war as we speak.
Yeah, I think that you know, it could be a negotiating ploy. I mean, he did then pedal back what he was saying about a trade war by linking it with progress in the NAFTA talks with Canada and Mexico. So with Trump, for example, it's not so easy to know what is bluff and what is the reality. I think that's part of the game that they're probably playing to extract concessions from the negotiations that they're looking at. Now, of course, the biggest part of the deficit is actually not with China or Mexico. Is actually with not with Canada or Mexico. Is actually with China. And so far, the steel tariffs are not having an impact on that trade deficit, which the Americans want to get down. So I think what is interesting at the moment is that the equity market and other asset markets are remarkably calm about the potential impact of this. We've had a look at, for example, the names that would be impacted if there was a trade war or trade tariffs. And what we've found is that certainly those names over the past year since Trump got elected have actually outperformed, and even in this recent correction have outperformed the broader market. So certainly in the equity market at the moment, no real concern of a trade war. It is the case that steel companies and aluminium companies, particularly the Indian ones, have been negatively impacted as a result of the developments we've seen over the past few days. But in terms of the broader market, no real impact yet seen.
Yeah, I saw your note wherein you mentioned that companies like SAIL might get impacted in a meaningful way if this indeed turns out to be true. So then what are the markets really worried about? Because if I've read your previous interactions, I mean, they may be television interactions, but I happen to read them on the site, you believe that yields, globally at least, the US yields, were close to their peak levels earlier. And if that is indeed the case, that's probably a net positive. Despite all of this, the last one and a half months hasn't been hasn't been positive for markets. At best, volatile. At worst, in a market like India, a substantial downtick from where we were.
Yes. Well, I think India has got some of its own specific problems, relating to the banking sector, which you know about better than I do. Also, this MSCI potential threat to declassify from emerging market status basically is meaning that international investors who are already overweight Indian equities are not really being given a reason to buy more in Indian equities. The same is happening in Japan, where there's now a concern that the market will recorrelate with dollar yen, and even in Korea, where Samsung Electronics will be suspended for a few months, really foreign investors not being given a huge reason to be buying into those markets. I think the other thing that is happening is that volatility is continuing to remain elevated. So we look at this measure called covariance between the equity and the bond markets, and it's still above 8%, and that's more than double what it was a few months ago. And what that means is that it just keeps people on the sidelines. If anything, what we've been seeing in this region is that this bounce that we're seeing in equities has actually been used as an opportunity to sell into, rather than be buying more into that dip. And it's interesting in terms of styles as well. Value and quality are underperforming. Low risk is outperforming. And that normally is not a time when emerging markets really outperform. Now, our view is basically that if the equity market in the US breaks the start of year level, which is somewhere around the 2700 region, what the next phase we'll see, so in this current phase, what we're seeing is a lot of rotation. The next phase will actually see some liquidation. And in that environment, we're expecting emerging markets to actually underperform the US equity market. So this outperformance that we've seen, this marginal outperformance since the start of the year, is vulnerable, but only if that start of year level breaks down.
I have a question on India, and I don't know how closely you would have looked at these variables, but the very point that you mentioned, that the rotation might well turn into outright liquidation if we break the lows of the early year. Now, that would probably for the larger mother markets, but India has managed to do that. Yesterday, we were trading at fresh 2018 lows with an assumption that we do not see any negative fallout of this MSCI issue, and we do see a resolution, and that we've seen the rough end of the stick emanating out of this PSU banking mess already. Do you foresee further pressures on India?
I think that we're not expecting actually any announcement from MSCI until probably the quarterly rebalance that comes out in May. So until then, I think what we're seeing is, the market is certainly turning short-term oversold. So the RSIs are getting down towards the 30-ish level. But I think that what we're going to see is foreign investors just staying away. It may not be the case that they necessarily come out and sell the market. It's just that they won't buy the market. And we're actually seeing that both in the bond market, the foreign exchange market, and in the equity market as well. And so the correlation between the three of those is actually starting to pick up. And so India, with its twin deficits of the capital account as well as the fiscal deficit, needs this sort of constant inflow to come in to plug the gap. And without that, what we're actually seeing is not just in India, but Indonesia, Philippines as well. We're actually seeing the currencies and the bond market weakening as a result of that. And of course, as the bond yields go higher, then there's an alternative source of investment or route for investment for certainly for domestic investors. When they're being offered 7.5% yield for sure, do you really want to be taking all that equity risk that you're experiencing? So I think those are the potential pressures that we have, but we think that there's going to be continued choppiness and volatility in the Indian equity markets until probably around this MSCI announcement, which we're not expecting until May.
Until May. So maybe some volatility stays heightened until then from a global investor's perspective. Mohammed, Apabhai, really appreciate you taking the time out and speaking with us today on Bloomberg Quint. Thanks for joining in today.
Thank you.
Well, that's the view from Mohammed Apabhai of Citi, an important one at that. Clearly, he believes that until there is some clarification that comes in from MSCI, and if that it doesn't turn to be a no win, then that's a problem. But if the clarity comes in, then that's a big relief from a global investor's perspective. Until now, global investors, even if they don't sell, might just choose to stay away until they get a green light from MSCI. It's still a moving picture. We don't quite have a handle on what the eventual outcome of that is. One would presume that the eventual outcome will not be too negative. Just bring up what the equity markets are doing at this point before we get in our next guest in. We've just come off a little bit from the highs of the day, and this is the fear. We just hope that this doesn't really worsen. I think the Indian markets desperately need a day or two wherein there is some bit of buying that happens at lower levels, and we end up higher than what we were at the start of the trading day. Until now, for the last 7 days, we've only ended in the red, and in 2 or 3 cases, we started off very well and then ended off getting sold off. Let's see if today is a similar day or today turns out to be slightly different than what the other days have been. Just have to mark what the banks are doing before we move into our next conversation. Remember, they've been at the center of the fall, and the banks are out there again. SBI, Yes Bank are amongst the key losers. Remember, when we started off, the market breadth was really positive. Now it's about even Stevens. The heat map will show you that there are probably equal number of gainers and losers on the Nifty 50. Yes Bank down about a couple of percentage points. State Bank of India down marginally in trade. Commodities have come off. So Hindalco, Coal India, Ambuja Cements are among stocks that have come off as well. And BPCL continues to grind lower, about 1.25%. No, actually 1.75%, 1.7% lower for BPCL in the session today. So already we're seeing chinks in the armor. Let's just see if this worsens or this stabilizes. Speaking of commodities, this group is the world's largest steel manufacturer, and they are now looking to change their fortunes in India. ArcelorMittal, which had a patchy run in the country with its investment in Uttam Galva turning sour, is now willing to go all out for its bid with SR Steel. The steel giant's global head of strategy, Brian Arana, tells Menka Doshi that they are willing to take a legal recourse if the bid is rejected on technical grounds.
We are very committed to acquiring this asset. So that's one statement I think that we can make. And with respect to the eligibility, we have the resolution professionals who will determine that. There's a committee of creditors, and then there are the courts. There are several levels of discussion that can take place. So we will hopefully be, our view is that we are eligible now. So we are not looking forward to any court battles because our eligibility at this point in time, from our standpoint, is clear. We think that the Section 29A is intended to keep out willful defaulters, which ArcelorMittal certainly is not. The spirit of that law is pretty clear. So whether there will be a court battle or not is another matter of speculation. But at this point in time, I think our focus is on our eligibility, which we think is clear, acquiring the asset and then moving it forward to achieve its full potential in the Indian economy.
All right, I'm not sitting here to judge whether you are eligible or New Metal is eligible. I'm just simply asking that the chances right now are fairly high that this will end up in court, and therefore how prepared you are for that battle. But I think I've got your answer there. The question with regards to the financial bid, now there are some rumored numbers out there. It is expected to be that the plant or the business of SR Steel is valued at about $6 billion. What can you share with us? Again, I suspect your answer is going to be that's confidential, but nonetheless, I should put the question to you.
Yeah, probably that's the most confidential of all things in the bid.
All right, but $6 billion valuation, a ballpark is correct for the business?
Well, I think each bidder has probably done their own valuation and understands what they can do with the asset and made their bid accordingly. So that's all I can say at this point.
Okay, by the way, my fear is turning out to be true. I hope it doesn't play out during the course of the day as well, but the Nifty Bank is dragging the indices lower now. 53 points higher for the Nifty Bank. It started off 0.7%, currently just about 0.24%. Yes Bank, the principal culprit, but remember, that's not the heavyweight really. If you just look at the contributors list on the Nifty, yes Bank, because of the minor weightage, it might not be really mattering too much, but because it's fallen so much, it's amongst the top contributors on the Nifty on the downside. But IndiaSind Bank, amongst other stocks, has also come off, and all of that is negating the kind of impact that HDFC and ICICI Bank are putting out. Actually, it's because of those two, and to an extent Infosys, that we have about a third of a percent gain on the Nifty. Otherwise, there is some pressure points out there. At the broader end of the spectrum, Balrampur Chini is the top loser. Remember, a bit later on Trend Spotting, we'll speak to a sugar company to try and figure out what next after the sugar prices have come off and the glut that we've seen. But 5.5% down for Balrampur is no mean feat. It's really come off quite rapidly from that 130 level all the way to 90. There is weakness in Adani Group stocks. Yes, again, I presume Adani Power at least is down about 5.5. It's now the top loser on the Nifty 500. But let's bring up Adani Transmission and Adani Enterprises as well and see if there is more pressure. 2.5% down for Adani Transmission, and Adani Enterprises should come up on your screen. That's about 1.5% down as well. So no, the going stays tough for these stocks. REC continues to grind lower. Suzlon is now 11 rupee stock, but clearly markets don't want to buy any kind of risk. A lot of stable companies are available at better prices. Why don't you go out and buy some of the riskier names? Amongst the gainers, few and far in between, I must mention, but Aegis Logistics has that 7% uptick and standing tall because of the Motilal Oswal note. Otherwise, this would have fallen off the cliff for sure. I mean, otherwise this wouldn't have had the move that it has had today. Reddington about 4.5% higher. Deepak Fertilizers about 4% higher. And Rain Industries marginally higher, about 2% in trade. I must say, it's not that IT is giving a big support in the session today to our bourses. The Nifty 50 is not punctuated by gains related to the IT space, but save for Infosys and HCL Tech, the others are lying fairly dormant. TCS is just about 1/3% in the green. So really not big bang support being given by the defensive space in the session today. HDFC 1.5%, that's not too bad. Reliance 1%, that's not too bad. So those are a couple of stocks that are giving some support to our markets. Okay, moving on to the next discussion, and that's real estate. Now, remember the last few days we've been speaking about how the newer absorptions, the newer projects are being absorbed very well. That was the ANAROC report. However, when we spoke to a couple of real estate companies, they said that it's not that all new projects are taking off in a hurry, and the offtake has not really picked up in a meaningful way. Are people buying at lower prices? Is there more traction for the branded players in cities like Mumbai, Bengaluru, Pune, and some of the others? Let's talk about that with the Chief Executive Officer of Kolte Patil, Mr. Gopal Sarda. Good having you, Gopal. Thanks so much for joining in. You know, 6 or 9 months ago, when the equity markets at least were very, very bullish on the real estate space, I think the conversation was that the 5 or 6 branded players, which included Kolte Patil, will see a big surge in the quantum of work that is available for them to choose, and then it will depend on execution over the course of the next 3 or 4 years, which will determine how do the companies move. Has that scenario changed?
Absolutely. So if you see, we are pleased with our operational performance for Q3 financial year 17-18. So our pre-sales numbers were up by 87% YOY. We have delivered 0.59 million square feet of sales with an sale value of 328 crore. As far as collections are concerned, we have recorded 280 crore, which was highest in the last 18 quarters. And in terms of top line and bottom line also, we have showed 27% and 55% growth compared to YOY. So I think things are very good for the organized and developers like us, who is completely execution focused. And in terms of the overall hygiene check at the organization, I think those who are following the customer centric approach and focusing on execution and delivery, I think for them the market is very good, and we are very bullish for next 8 to 10 years, wherein we can see the company will go to the next level.
If I look at your Q3 FY18 numbers, as you said, the numbers look good. Realizations, though, took a bit of a hit. How much have realizations fallen since then? If they had fallen 10% already in the month of December, has there been a further cut for the industry at large, not just for you, in the first couple of months of this quarter?
So as far as prices are concerned, so for us it's been a stable prices from last 6 to 8 quarters. So whatever price relation you are seeing, these are net of GST impact. So the average price relation is in the range of 57-5800, but this what we are showing is a net of GST. And being a larger portfolio, so like we have affordable, MIG, luxury, super luxury townships. So it all depends which vertical is contributing to the particular quarter. So if sometimes 24K is contributing more, so you see the uptick towards the price relation, and if sometimes the affordable or MIG division is contributing more, so you will see some sort of fluctuations in the APR, and whenever there is a shop sales or retail sales, so the APR will shoot up sharp. But as such, there are no price cut per se, and the prices are quite stable across markets for at least a branded and good developer like us.
You've not had to reduce prices at all in order to spur up sales? Because I speak to developers across Mumbai, and everybody is saying that even if officially prices are not down, when buyers are coming to the table, everybody is asking for a small discount, and they are giving it as well in order to execute sales.
So per se, as I have already mentioned, prices are absolutely stable as far as last 6 to 8 quarters are concerned. So wherever there were, let's assume some sort of festive seasons, or whenever developers are running campaign to generate larger volumes, so they are building 2-3% sort of discount or freebies, which is only for a particular period to generate the next level of sales volume. Otherwise, prices are quite stable for us, and as far as organized developers, what we are observing per se in the market. Mumbai, if we talk specifically Mumbai, due to the GST impact, if few projects the ticket size is going to the next range, so probably few developers have started absorbing the only GST impact. Otherwise, I think prices are quite stable across markets.
Interesting. Now, what's the nature of project wins and project launches that will happen, Gopal, over the course of the next 2 years? Again, my question stems from conversations which say that a lot of companies, maybe Godrej Properties, maybe you as well, have really taken up a model wherein you are getting a lot of queries and inquiries from landowners, stroke redevelopment owners, who are asking you to come in and do the redevelopment work without putting in any money and be partners, 40, 50, 60% as the case may be. Is that true? And if so, does it improve the ROI that a company like yours enjoys on these projects?
So I'll address the first question. So per se, from last 2 years, if you see whatever volumes we have generated, last year we have delivered 2.09 million square feet without any launches. This year also, till now, in first 9 months, the pre-sale number was 1.6 million square feet, and this is the entire sale is coming from the sustenance. So there were as such no launches. Going forward, 18-19, there were 4 projects and around 4 million square feet of launches which we are planning, and that's where we are expecting the pre-sales number goes to the next level. In spite of this turbulence in the market in last year, like RERA, demonetization, GST, few months were, the sales were like 50% of the preceding months, but still this year also we will be closing somewhere around 2.2 million square feet of sales. So per se for us, sales is not a challenge, and we see a very good response from the consumer coming in. Now, after the RERA, under the RERA environment and the GST and the sectoral transparency, whatever has happened, so the small time developers or landowners are accepted that yes, to monetize their land, the only way is to just go to the larger developer, approach them, and consider either a profit sharing, revenue sharing, or a JDA sort of model. So yes, you are right, absolutely. As far as the redevelopment portfolio is concerned, we have around 12-14 projects in the Bombay market, and all projects have acquired under a strategic acquisition, wherein we are at the time of DAPA, we are only paying the stamp duties, and our first investment starts linked to the approvals. So once we have all the approvals and giving them notice to vacate, that's the stage wherein the investment starts in the project, and that has been well accepted by the societies also. As far as the JV, JDs and other outright transactions are concerned, so we are promoting ourselves as a factory wherein we are very good at sales, we are good at construction, get your land processed from this factory, and whatever free cash flows are there, 1% landowner can keep, 1% can come to the developers. So this gives us to expand our ROCs margin and probably the return on equity also. As such, we not have to put heavily towards 100% of the land cost. We can start this project with a marginal 8 to 10% of land cost as a deposit, and that's where the ROC and the next level of cash flows coming into the company.
So Gopal, here's my question. I think for 9 months, you've done a revenue of about 923 crores, say 950 crores. And let's say that you'd probably do about 1300, 1400 crores as the case may be. Over the course of the next 3 years, what percentage of your revenue will come in from projects such as these, redevelopment or JVs where you don't have to put in any money to buy land and make an upfront capital investment? What proportion of your overall revenues will be such projects?
So as far as you have rightly pointed out, last year we were at 965 crore top line and 81 crore sort of PAT, and this year probably we will be showing 30% jump as far as top line and bottom line is concerned. And if this year the contribution coming from Bangalore and Mumbai is somewhere around 8 to 10%, we expect by 2020 25% contribution is coming from Bangalore and Mumbai market, and by 2022 55% from Pune and 40-45% from Bombay and Bangalore market as such. So Mumbai for us is an asset-light model wherein we not have to invest heavily. We are focusing more on the ROCs and better working capital cycles. So going forward, I think since the cash flows you have seen on the books are strong, so probably next 4 to 6 months we are expecting somewhere around 140, 150 crore of free cash flows. So this we will deploy to the new acquisition. So for 18-19 will be a complete business development year for the organization, wherein we are expecting to acquire 8 to 10 million square feet under affordable MIG and super luxury projects. And that will be the next level of fuel to the organization for the next level of growth. So we are quite bullish, and I think till 2020 or by 2022, every year 18 to 20% sort of CAGR growth as far as bottom line and top line is concerned is very much possible.
I have one last question really. What do your return ratios go up to, looking at the model that you are? And it's a fairly interesting model. You're using cash flows from the redevelopment projects and otherwise to maybe shore up land bank for the future. But what does this do to your return ratios from where they are to what they would be in 2022, say, if you can indeed look that far, wherein the balance of Mumbai and Bangalore to Pune changes quite dramatically?
So as far as till financial year 18, if you see, we are one of the largest ROC in the industry. Today we are working on 14% ROC and 11% sort of ROE till financial year 18. Going forward, as you have rightly asked, financial year 2020 or financial year 2022, we expect ROC to expand to the range of 18 to 20%, and PAT will expand from current 9% to 11 to 12%. So going forward, ratios will be better because Mumbai region, wherein our investment will not be that high versus the average price realization is quite good. And in terms of the kind of approach which we are following at the organization, a 360-degree approach wherein our focus would be over towards investment, design and development, sales, construction. So operational efficiency will further improve 2 to 3% sort of PAT. So by 2020, we expect 18% sort of ROC and around 11 to 12% sort of PAT.
Well, a pleasure talking to you today, Gopal Sarda, and thank you so much for taking the time out and speaking with us and giving us your thoughts. That's Kolte Patil, fairly bullish about the future ahead. By the way, the immediate future doesn't look too great for the equity markets because the Nifty Bank is now trading in the red. The Nifty 50 is about to do that as well. It's come off quite dramatically. The template stays, just that it worsened because now we're seeing these pullbacks happening on an intraday level. No matter where we start off, we're seeing a pullback happening into the markets. 10,171, we're perilously close to the 200-day moving average, a matter of 40 or 50 odd points, and we nudge those levels as well. The Nifty Bank in the red as we speak. But before we end Indian Open, and time to end that, while we don't need a particular day to show our gratitude, and I repeat the term gratitude, we take this opportunity to thank the women at Bloomberg Quint who make our lives a lot easier. Thank you, and a happy Women's Day to all the women out there.